This is a story about a dude named Lane. Then one day he went and tried to rent them out, and then he became one of the best domain.
All right, folks, it is November 2020 monthly market update. Today's Easter egg, if you would like to download, is the full Hui share drive with pretty much all the goodies in there, investor files and spreadsheets, plus free access to the first 3 modules in the eCourse. Go to SimplePassiveCashflow.com/club and join in there. But if you haven't met me, my name is Kawaoka. I am the creator of Simple Passive Cashflow, all about distilling the secrets of the wealthy. But on today, we are going to be recapping some of the news that has been happening this last month. We'll get into the election a little bit. Right now, it's still a little bit of a toss-up. It looks like Biden is probably going to come out ahead. But starting with teaching points that I've been working with some folks on lately. So a lot of people have been taking advantage of the CARES Act, getting $100,000 out of their retirement accounts, as we call it, jailbreaking. One tactic that is being used is, say, an investor has a big salary, so they're making over $200,000-$300,000 a year, and they have a lot of money in their retirement account. But when they take money out of their retirement account, they slide it out as ordinary income. So if you're making over $200,000-$300,000, you're in the highest tax bracket. It may make sense for you to put it into what's called a QRP instead. There's more information at SimplePassiveCashflow.com/QRP. It's another tool out there, right? Every situation is a little bit different, and the QRP is not the right situation for everybody, but in certain cases it is. I think what's another investor in our Hui group, which you guys can join on Facebook, just shoot me a message. We'll get you access to there. But folks are using, you don't get any tax benefits, unfortunately, when you invest via a QRP. So it's great for investing in Bitcoin or all these things that don't give you the tax advantages of real estate. Or, if you're just a private money lender or a debt investor, which I don't really see why you would want to do that in the first place. But if that's what you do, or maybe you do life settlements too, that's a great use for the QRP. For my video window, there it is. Another teaching point here, we've been using a lot of lately because we are able to be a little more liberal with the deductions. Some of the things that we can do are by calling, we don't do home offices. That's a bad word. We call them administrative offices. And we do this Augusta rule. A lot of this is in my tax guide at SimplePassiveCashflow.com/tax. I'm not a CPA. I'm not a tax attorney. So I'm not giving you any legal advice. This is just to get the juices flowing so that you can also go to your tax professional and pay less taxes. That's what it's all about, because you guys are the ones putting money into the economy and investing it. Oh, I had a thought here, and it looks like this is probably going to happen if Democrats would win. Just an idea here, maybe we should convert more of our retirement accounts, or maybe take out money of your QRP if you have one to cash. I'm thinking taxes will likely be going up generally, but understand it is mostly for the higher tax bracket folks. They're trying to hurt the guys that are $400,000 AGI and above. But if you guys are smart, your AGI isn't that high, you're able to bring it a lot lower. So I don't really want to get into the election or anything like that. But frankly, I don't care who wins, because all the tax stuff, I personally fly under the radar. And that's really what the whole Simple Passive Cashflow gravy train is all about. Investing in deals, getting passive losses, lowering your ordinary income with real estate professional status. It's all a game. It's a game. Paying less taxes legally. All these rules you don't really apply to you. So it doesn't really matter who's in office. And oh, by the way, it's really more depends who's in the Senate, because they really make the laws. In my opinion, the president's kind of more of a figurehead, especially when it comes to taxes and those types of things. But I'm probably going to be having Toby on the podcast next week discussing implications on taxes based on once we figure out who's actually the winner. But yeah, getting into the monthly news. President Trump got COVID-19, and I think it got swept under the rug after he got it. You never really heard the story get closed out, but shocked the financial markets. And I'm just like, what the heck does the president getting COVID have anything to do with the markets going up or down? It's either that or newscasters are just fishing for news again. The other thing big that's still at play, we're still waiting for that second really big stimulus plan that is taking a really long time to come through. Democrats want it a lot higher than Republicans, and it's been a stalemate. It'll probably get pushed through here in the next month as elections happen with those talks. But either way, I think a lot of real estate investors tend to be more on the right, more libertarian, if anything, but I don't really care one bit. Simple passive cash was not about being political one bit, but understanding which way things move and reacting the best way as an independent investor. But typically the Republicans are better for the economy. But if the Democrats win, they're pretty more liberal with pumping fake money into the system. So that can be, I think of it as heads I win, tails I win type of a scenario. That's really where you guys should get to at some point too. Figure out where the puck is going and skate to it, as the great one said. But overall, bright outlook for housing. The demand for housing is very strong, and the confidence required for individuals to purchase a home cannot be understated because of the low mortgage rates. And right now, what's pushing up prices in a lot of areas is the low supply. So people aren't putting their homes on the market. I don't know if demand is higher or lower than normal. The prices are dictated by supply and demand. And right now, supply we know is low. So that is why prices are going up. So I really like the New York Times. So they came up with this article where they modeled the temporary layoff right after COVID happened, and it really bulged out in April and in May, and then has been tracking down in June, July, August. It really visualizes how big the temporary layoffs were. And on the right side here are the permanent layoffs throughout the months. Those of you guys listening in the podcast form, I also post this on the YouTube channel. You can check it out at SimplePassiveCashflow.com/investor letter, where all these monthly reports will be held in case you ever miss these. So we are invested in Biloxi, Mississippi, or Gulfport, and maybe you've seen some of the Hard Rock t-shirts. I know that's the first time I saw Biloxi, but I went and stayed down here it's like a casino row on the boardwalk there. But we have a couple of smaller apartments, a couple of 100-unit sizes there, but we chose not to do a cost segregation because in cost segregations, the crossover point to do one and spend $5,000 to $10,000 to do one to extract that bonus depreciation only makes sense if you're going to hold on to the property longer than 3 years. And you're just not too bullish on Biloxi in general in the really long term. I still think it's a great market, but we opted not to do that cost segregation because once we rehab those units, we're going to probably just be out. But this news story popped up. So Universal Music and Dankai U Ventures is putting a 1.2 billion entertainment destination in Biloxi. It is eclipsing the 750 million Blue Ridge Resort and Casino that the great Steve Wynn developed back in 1999. I'm not saying that this one project is going to sway my thinking on my exit strategy on those a couple deals, but that's a lot of money. $1.2 billion is a lot of money to go in on a small town like that. So I'll be watching this, and these are the stories to be on the lookout for. Just like in Nashville, so Southwest Value Partners opens a 591-room Grand Hyatt hotel within Nashville. Now, not saying that you're investing in hotels or anything, but hotels are a great indicator of progress. And Nashville is another market that I watch that still cash flows, and it is a little bit of a buzz around the town of Nashville. I haven't found anything yet, but always looking, like I said. But Nashville is another market to be on the lookout for. This is reported by RE Business Online. A pretty nice building. Some news out of California and Florida for the Mickey Mouse fans out there. Disney to lay off 28,000 employees at theme parks. So that ain't good. They're closed now. No one's going to this stuff. So this kind of makes sense. I'm sure these things will bounce right back once the pandemic fades away next year. Moving to Texas. So Business Now reports that Texas Central receives Fed approval to move ahead with the Houston-Dallas bullet train. So this thing is supposed to go 200 miles per hour and travel between Dallas and Houston in less than 90 miles. I don't know when this thing is going to be coming online, but that's going to be pretty cool. Texas is amazing. That's probably why it's being more democratic, because everybody else from California is running to get the heck out of California. That's probably, I think that is why Arizona swung as a state to go Democrat, because a heck of a lot of people are Californians or ex-Californians moving over there. But again, not to get political or anything, but that's just people moving away, and you got to follow where the people are. Texas is on fire still. And something like this, you can't build something like this. This will get built a lot quicker, I think, than the Sacramento to California. I used to build railroad as my first career as a project engineer and track engineer. And I'll tell you, it's to build this track, it takes like moving mountains to get all the land. And that ain't going to happen in a place like California. But Texas is the one place that you can get nice, long, linear pieces of land. John Burns reports, they put that together, these neat infographics. So again, if you guys check out the investor letters at SimplePassiveCashflow.com/investor letter, you can see these. Or I'll usually post these to Instagram channel or the Facebook page. But they want to compare what's a better place to invest, Florida or the Southeast. 3 categories here. As far as housing market, they think Florida has the advantage there. The rental market, they see it as a tie. And as far as economy, they're giving the nod to the general Southeast, benefiting from biotech, banking, manufacturing, industrial sectors. The reason they nudged it over Florida was because of Florida's service-oriented economy, like the Orlando was what they're probably talking about. But Florida, Southeast, great places to invest, especially if you're looking for cash flow. All right, so we're looking at a chart from Arbor ranking the top markets. So Seattle, Phoenix, Austin, San Antonio, Dallas, Portland, Baltimore, Denver, Minneapolis, Columbia. This is a list of, this is like what they see as the new opportunities. Seattle's at the top. I don't really quite buy that. I think Seattle's a great market. It just doesn't cash flow, so I'm out. But Phoenix, Austin, San Antonio, Dallas are next. Phoenix and Austin follow closely behind Seattle, betting from resilient labor markets. Texas metros led by Dallas and Houston continue to capture an outsized share of large multifamily investment. So a little subnote here, I always recommend reading the whole article. Maturing millennial households have a growing desire for mixing the amenities of Class A multifamily while also enjoying the space of the suburbs. So this is that push for what's being called the term suburban multifamily, right? So not really in the CBD core business district, not the marijuana CBD, but that other CBD, but more on the outskirts and suburbs, maybe 20 minutes, an hour outside the city center is what they're talking about, these suburb multifamily performance. And that's what I like to invest in because there's a nice push towards that. A couple more graphs from Arbor. They're showing on the left here, large multifamily lending is going out to Dallas, Houston, Phoenix, Atlanta, then DC, New York, Denver, Philadelphia, Orlando, San Antonio. So 4 of those markets I like a lot. Dallas, Houston, Phoenix, and Atlanta, top 4. Large multifamily lending to round out the other chart, which is they're ranking at percent share of loan account. Dallas, Houston, Phoenix, Atlanta, then New York, Washington, Orlando, Philadelphia, San Antonio, and Denver. So the biggest, and the last chart from Arbor here, they're trying to show the large multifamily lending. Now, where is the lending volume per capita happening? So the tops are Orlando, Denver, Phoenix, Las Vegas, Jacksonville, Florida, San Antonio, Austin, Charlotte, Nashville, Dallas. Now, I don't know all this really means, but it's just showing you where the action is happening, right? Where's the activity happening? A little bit sad thing, you guys know Black Panther, Chadwick Boseman died last month. There's a story here that unfortunately the guy didn't have a will. So the wife files probate case. So that's unfortunate that when you don't have a will, you actually, even when you do have a will, all your stuff remains public out there. What you really want to have is a trust. So that's like one of those, I think that's a shady thing that lawyers do. They shouldn't make you a will because by making a will, they did sure they get the probate work when you die. Really, if they want to do it, they should be making you get a trust. So make sure you guys get a trust this year, especially if you have kids. Friends don't let friends have wills. Joint Center for Housing Studies from Harvard University, must be legit because it's Harvard, says that most homeowners started do-it-yourself projects during the pandemic. So normally they're hovering around the 60%, and it went up to even as high as 78% in May of people starting a home maintenance project. So this is probably why my lumber prices skyrocketed right before we were going to sign a contract. Luckily, lumber prices have come back down, and it's probably the same phenomenon why you guys can't buy flour at the grocery store because everybody's baking sourdough bread or whatnot. Another thing that I watch every year is this PricewaterhouseCoopers accounting firm comes up with this. They team up with the Urban Land Institute to have this conference every year that they call Emerging Trends. And they come up with this really cool report. It's a nice read. It may not be super actionable, but they released the top 10 emerging markets that are as follows: Raleigh, North Carolina, Austin, Texas, Nashville, Tennessee. There's Nashville, like I said, Dallas, Fort Worth. We talk about Dallas all the time. Charlotte, North Carolina, Tampa, Florida, Salt Lake City, Washington, D.C., Boston, and Long Island, New York. So those top 10 emerging markets from the Urban Land Institute and Pricewaterhouse Emerging Trends. When I read this report, I always keep in the back of my head that they're capturing a lot of the luxury markets. So in this list, I probably throw out Washington, D.C., Boston, New York, because they don't cash flow. So I, as an investor, am not hitting that pitch. National Real Estate Investor reports San Francisco apartment rents crater up to 31%. And yeah, most people are getting the heck out of San Francisco. A lot of the employers are telling their people to work from home because a lot of them are tech jobs, and tech guys can work wherever they want for the most part. And if you have to stay at home and shelter in place and can't go out, why would you want to be in the hustle bustle in the city where there's in this time no social activities? So this is why people are getting the heck out of San Francisco. A lot of them are moving over to the Bay and Oakland or spreading out elsewhere. It is the U-Haul report time. This is what I always get excited every year. The U-Haul report gets released. Here are the winners and losers. California, Seattle, Portland, just getting bombed. People are getting the hell out of town there. And they are going to, you guessed it, Texas, the Southeast, Jacksonville is labeled on here, Austin, and they're getting the heck out of the Northeast, New York, Boston, all those types of places. And if you haven't heard it, you need to get out of Chicago because that state is going underwater fast. Helping a lot of people get into turnkeys in Gary, Indiana, which is just on the other side of the border. So they're beneficiary of a lot of people trying to get out of the state. Gary, Indiana to Chicago, Illinois is like people living in Vancouver, Washington, but working in Portland. Bloomberg reports that Las Vegas tops the U.S. in rise of apartment tenants not paying rent. Those Las Vegas people. 10.6% of Vegas tenants missed a rent payment, up to 4.1% year earlier. I don't know, I don't want to say anything bad, but they seem like gamblers out there. But yeah, this is why I like to invest in more red states, especially the Southeast. This seems to be typical of the Californian type of, or West Coast type of mindset, where you blame it on somebody else if you can't pay your rent and you never had your savings accounts. But yeah, maybe that's near side of me. A lot of these guys, they just can't work. So when you're a tourist-based economy and the hotels aren't open, you don't have very many options. But I don't know. That's just me. I think if you can't pay, you should tell your landlord to move out. So if you guys are struggling building your network, we always say building your network. Net worth is all about building your net worth. It's all about surrounding yourself with the right people. Going to the local RIA and the free online forums out there are some of the worst places to go for passive investors because everybody's broke, right? They're all into house flipping, being more active. A lot of people in our tribe are more passive investors that are pretty good with their money. They save their money prudently. So we've got a couple options for folks. If you guys are new, trying to build your net worth up to over at least $250,000, and your prescription for that is buying a single family home or renter, especially if you live in a high price area or blue state. Check out the remote investor incubator and eCourse. That's at SimplePassiveCashflow.com/incubator. We'll be starting the next class probably in January, February. And if you guys are accredited investors and looking at taking your way to the next level, 1/3 of our scope is to analyze syndication deals, become a sophisticated investor, and at very least, not go into those sucker deals, the daisy chain deals out there. You guys can check that out at SimplePassiveCashflow.com/journey. And this is where we teach and we put all our heads together on how you can do the simple passive cash flow gravy train, which is all about paying little to no taxes via getting the passive losses from these larger syndication deals and using that to pair with a real estate professional status tax strategy. A lot of ways you can do this wrong, but every situation is different. This is where we arm you with the information to take it to your tax professional to set this stuff up for you. We are probably rebranding this as the Family Office Ohana, trying to make it more of a community of high net worth investors, and it's going to be more of a collaborative environment. Now, this is the time where I switch gears and I talk a little bit about what I'm up to personally. Hopefully, I'll give you some ideas and things to work on in December or January. But this always goes and follows the framework of Tony Robbins' 6 needs. The first is, how do I find growth? What was I working on? As a lot of you guys know, I work with a coach, and they don't know my business, but I see it more as like accountability. I pay people to keep me accountable because I know how important it is and how much time I waste and how much leverage I can get when somebody is helping me do that. But we really work this month on something super basic that I wanted to just share with you guys. It's called the RPM tactic, but it's all about figuring out first thing, what the heck do I want? What do I want? Like if your spouse is giving you a hard time, yelling at you, so what do you want? What is your end goal, right? Or you're not happy and you want to change something, what do you want? And then from there, once you define what you want, then you can figure out what specific actions that you want to make to happen. And then, but to really make it stick, you need to do what purpose? What do you really, why do you want this? You have to root it in, right? For example, what do you want? I want a 6-pack. I want washboard abs. I want to flex on the beach. All right, what specific actions do you have to make it happen? Better, blah, 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 exercise. A lot of people forget of what is my purpose? Why do I really want to do this? Because if it's simply for vanity reasons, I guess that's a pretty good motivator. Or maybe you just don't want to look like you're lazy at the beach. That can be a big motivator. Nothing wrong with that. But maybe you really want to live a long life to see your kids when you're older. But that's really important to root that. Why are you doing it? How do I find contribution? I recently interviewed the now mayor of Hawaii, Blangiardi. It's interesting talking to him, getting into it, and then talking offline with him a little bit. And this guy's turning and burden at that older age. I think he's like in his 70s. It's pretty amazing watching him go. But I pissed him off. I told him I didn't really care about politics, and he got all upset with me. And I was like, dude, like I do all right. Push your values on me, bro. But yeah, I see where he's coming from. But that's why he's putting his time and energy and his passion is politics. And I think I saw it right through. And I think that he's the guy you want for mayor. You don't want me. I'm more thinking about myself, and I just quietly want to grow my empire. I'm not at this point where I want to become mayor at this point. Politics frustrate. Significance will be close a couple deals this month. I think it was yesterday actually. We closed Whispering Oaks, 140 unit in Conroe, Texas. Light value add, stabilized apartments. 40 out of 140 units are already rehabbed already, proving the business plan on the higher rents. Great property. I was there about a month ago. Feel really confident on that one. And then a couple of weeks ago, closed on a little 27 unit in Tempe, Arizona, suburb of Phoenix. Great debt on both of these properties, both Fannie Mae, long 12 to 15 year terms. 3.06 on the Whispering Oaks deal. And that's my strategy these days. Is if you can get it for such a low interest rate, like at 3%, you're cash flowing day one. Really, your downside is pretty low. Really, the only risk is if you can keep the property occupied more than 50 or 60%. It's usually the break-even point. And you guys have checked out the Huntsville 3-pack. This was the biggest year to date, the 407 unit. It was 3 properties. One of the properties took a really long time to close. We finally closed it much earlier than this month, but that kind of wraps up that portfolio. So the first 2 properties are going awesome, higher performer rents, those, and often moving. I think it was a great year. Toot my horn. It's always to have a fulfilling life, you need a little uncertainty in it. We had some hurricanes there. Hurricane Delta messed up some of the mobile home parks in southern Alabama, Gulf Shores. I forget what the first hurricane was. I think it was like Sally, but we got through that one with a little bit of damage. But Delta, these are some pictures of Delta. But right now, just working through the insurance. I mean, that's why you have insurance. So the problem there is you have to put up your own working capital. That's why you have cash reserves in your budget, so you can overlay these types of repairs before the invoices come in. You pay your invoices, and then you get reimbursed by the insurance company. That's the kind of painful thing, but that's why we have commercial insurance to cover us for this type of stuff. Certainty. It was really nice to finally pay out the first we always tell investors that we restabilize the asset in a couple quarters, and we were able to do this on Huntsville deals. Yeah, 51 grand went out for the first quarter distributions to investors, and some people like to show a bunch of checks. We don't do checks, we direct deposit it. It's 2020, so here's a screenshot of that going out. To me, it makes me feel good. Cash money going out to investors. That's what it's all about. Making money and also celebrating a little bit too. I was in Cleveland, Ohio. We did a little investor reception to celebrate the closing of the Rockefeller. We rented out a little space in the Rock and Roll Hall of Fame. Got to check that out, got to talk to some investors. And I saw some of you guys in Houston in early October too. I had a little investor picnic in Hawaii also, but I wanted to also announce we are not going to be doing the in-person retreat in Hawaii due to everything that's going on, but we are going to be taking virtual, and it is going to be like nothing you've ever done before. It is not going to be a bunch of lame speakers giving you their same lukewarm presentation they give 20 other places. It's going to be me. I'm going to be distilling the information of all these little tactics and tricks that we've gathered over the past few years. The simple passive cash flow gravy train, using passive losses, the bonus integration. Yeah, we're going to talk about that. Why you don't want to use 1031s, the hot air balloon analogy. Yeah, we're going to talk about that. But we're also going to implement in a lot of networking. So I'm going to teach these concepts, but I'm going to break you guys up into little mini groups, and you're going to be able to teach each other the concepts and actually talk about specific strategy. Everybody's going to be vetted coming in here. It's all going to be pure passive investors, and everyone's got to apply to get in. And I'm still creating the agenda, and be on the lookout for that this next month. But it is going to be amazing. I'm so excited. But new podcasts and articles that I released this month. It's been nice having some help creating these videos, helping me get this content out to you guys. But if any folks have any questions on any of these specific topics, let me know, or ask the question in our Facebook group where we can all chime in. The resistance and barriers. I need an intern. If anybody has any type of kid that is willing to do a little bit of rep work and need a little bit of a mentorship, I like doing that. So I want to grow this a little bigger. So I bought some decaf coffee. So I'm trying to stop drinking as much caffeine, and I'm trying to grow the lawn a little bit better. And so I bought this aerator. It's like you step on it and there's 2 pins in there, and it just you do it several hundred times. And this thing is one of the most therapeutic things that you will ever do in your life. I really recommend it. It's good for your lawn too. And it's good exercise if you're listening to podcasts or whatnot. But that's something that I'm working on the side. We'll see you guys next month. Talk to you later. Bye.
This website offers very general information concerning real estate for investment purposes. Every investor situation is unique. Always seek the services of licensed third-party appraisers and inspectors to verify the value and condition of any property you intend to purchase. Use the services of professional title and escrow companies and licensed tax, investment, and or legal advisor before relying on any information contained herein. Information is not guaranteed, as in every investment there is risk. The content found here is just my opinion, and things change, and I reserve the right to change my mind. Above all else, do your own analysis and think for yourself, because in the end, you are the only person who is going to look out for your best interests.